is to avoid any fraud, obviously, but they also want to avoid any mismanagement or poor management of these federal funds. So if you can show your compliance with the regulations, the terms and conditions, obviously you'll strengthen your relationship of trust with these federal agencies in hopes that you earn a phase 2, or down the road maybe you earn a couple of SBIR grants from them. We also want to make sure that you don't hit any of these roadblocks or these non-compliance issues. And I wanted to show this slide just to show you what some of the remedies are if a federal agency were to find you non-compliant. Typically, they're going to start with the top one there. They're going to impose some additional conditions. These additional conditions might be increased reporting to them. You might have to obtain additional prior approvals, or it might mean there's stepped up monitoring. If imposing those additional conditions doesn't remediate the actions, then they'll kind of go down the list here. They can temporarily withhold cash payments or even require you to repay some of the grant funds. They can disallow part of the cost. They could suspend your federal award until you have taken corrective action. And ultimately, if they find you non-compliant and they've done everything else they can, they could debar or suspend you from all grant programs. And only the federal agencies have the power to do that. So when Wanda and I are out working with companies in the community, here are the most common compliance pitfalls that we run into. Whether it's SBIR companies asking the questions about these, we just run into helping them get things set up and they're not set up the way that they should be. Whatever it may be, here's what we're finding and helping our clients get through. I'm not going to read these off because we're going to go through each of them individually. So we'll start here with non-compliance with agency guidelines. First and foremost, read the award documents. There is a ton of information in these award documents. All of your terms and conditions, any restrictions that they might impose, just become familiar with your award. Another area is if you have significant changes as you're going through your research, there are certain areas where you have to obtain prior approval before moving on. The first one being a change in scope. An example is, let's say you have to shift from one disease research to another disease. That would be a significant change in scope. You would want to get a prior approval before moving on. If you're going to change your PI, also SBIR awards typically allow for you to go back 90 days to capture any grant costs or program costs that you've already incurred prior to the grant date. If you want to go beyond those 90 days, though, you'll have to obtain prior approval. And then finally, significant rebudgeting. NIH, for example, uses the threshold of 25%. And what this means is that, let's say you have a $200,000 award. 25% of that award is $50,000. So if you were to shift between your budget categories of, let's say, equipment and salaries and wages, above that $50,000 threshold or that 25% mark, you would have to obtain prior approval. Otherwise, shifting between those budget categories under that threshold would not require prior approval. Be familiar with your reporting requirements. Again, this should all be outlined in your award documents. Those reporting requirements typically range from program reporting to financial reporting, and they can be quarterly, annually, whether it's at the end of your grant. Again, just become familiar with those requirements. Record retention. There's actually regulations that you must maintain all of your records for 3 years, and this 3-year mark starts from the date of your final submission of your expense report, your final expense report submission. So make sure you're maintaining all of your documentation and supporting documentation for 3 years after that date. Subrecipients. If you have a grant and you're using, let's say, the UW or another educational institution or research institution to help you with your research, and let's say there's some research on the grant that you can't do and you need to subaward some of it to the UW. there are certain things that you as the holder of the grant must do. Ultimately, the responsibility will lie on you as the holder of the grant. Some of those things that you must do are to review financial and program reports that you're requiring. So make sure you're getting those timely and that you're reviewing them. Follow up with them to ensure timely and appropriate action is taken on any deficiencies. So these deficiencies can either come from maybe you decide to do an on-site review, whether you're looking through invoices, or whether it's found through another outside audit source. Lastly, speaking of audit requirements, know the audit requirements for your award. NIH actually has a requirement that if you incur more than $750,000 in expenditures and grant expenditures during a year, and at least one of those awards is from the Department of Health and Human Services, and NIH is part of that, then you would require an audit by an outside independent CPA firm. Non-existent policies and procedures. Here you want to make sure that you have documented standards and procedures for these following 3 items. So if the federal agency were to come into your organization and ask for your procurement procedures, you would have something to turn over to them and say, okay, here's what we're doing, here's our procedures. You know, procurement standards, essentially what they want to be able to see is that you are conducting larger transactions in a manner that provides full and open competition. That way you're getting the best price rather than just going down the road to another research company that you know, that you worked with. That's fine, just make sure that they're giving you the best price and that there isn't a better price out there. If you're just looking at smaller transactions, make sure you're just documenting, okay, who has the approval power, who has the purchasing power, etc. It's on those bigger transactions, more probably equipment or a subcontractor, where you want to make sure that you're, you know, going out and you're getting multiple bids for that particular work. Cash management. Here, the federal agencies just want to ensure that you have procedures in place to manage your cash that you receive through the federal dollars. So part of that is make sure you're reviewing your budget to actual expenditures, that you're making draws on, you know, typically these SBIR awards are cost reimbursement. NSF sometimes will do an upfront payment and, you know, a third payment halfway through, a third at the end. But for the most part, they're cost reimbursement. So just make sure that you're managing the budget to actual, you're requesting what you've incurred, and then you're depositing those funds into a viable financial institution. And then lastly, cost allowability procedures. Here you want to make sure you're adhering to the cost principles applicable to your award. Typically for for-profit organizations, these fall under FAR 31. You want to identify in those procedures how you're identifying direct versus indirect costs, how decisions are getting made, and at what levels in the organization those are getting made. Another hiccup that we see is this inadequate internal controls or segregation of duties. And what you want your organization to be able to do is have these internal controls in place that provide for effective control over and accountability for all of your funds, property, and other assets. So for example, budgetary controls. Again, we touched briefly on this in the last slide, but just make sure that you're not exceeding your award budget or your budget cost categories. You know, we talked about you can shift between the budget categories if it's within that 25%, but obviously if you're getting above that, you want to make sure you're tracking that and that you're getting that prior approval before you exceed that significant rebudgeting threshold. Segregation of duties is a large one that we see. Just given the nature, a lot of times these SBI companies are very small. So there's not a lot of bandwidth for segregating purchasing from recording the transaction to cutting the check. So a lot of times we will recommend that a company get their board involved at some level whether that's to review the bank reconciliation or the bank statement on a monthly basis, just to ensure that the vendors running through appear reasonable, appropriate. What you worry about here is the same person authorizing, processing, and recording a transaction could easily, there could be error or there could be fraud. If you think about it, the same person could create a fictitious vendor in QuickBooks. They could create a fictitious bill. They could cut the check to that fictitious vendor. They could sign the check if they're the only check signer. And then that payment could go to that fictitious vendor, which is in fact that particular person. So there needs to be some level of review or segregation of those duties so that the federal government is comfortable that those types of things won't happen, or at least get caught at some point in time. Finally, the accounting system. Wanda will actually touch quite a bit on this in her case study, but some of the things to keep in mind here is that you should be able to separate your costs by cost type. So that would mean your direct costs versus your indirect versus your unallowable. You also want to be able to accumulate costs by each of your projects, by your grants, by your contracts. You want to be able to capture and allocate your indirect costs, and you want to be consistent and equitable in allocating these. You want to be able to segregate your unallowable costs, and then you want to be able to provide the ability to calculate your indirect cost rates. Unallowable costs. So expenditures in general need to be reasonable. So, another prudent person in the same circumstances would make the purchase that you had made for that price point. The expenditures need to be allocable, whether it's direct or indirect. They need to be allowable. Again, go back to the cost principles. Are they in FAR 31 as an allowable cost? And they need to be consistently applied. For example, you want to capture and allocate your indirect costs in a consistent manner. So I have the definition for direct and indirect costs here. Essentially, an indirect cost is going to be a cost that you would incur regardless of whether you have that grant. So examples would be your rent, your office supplies, your administrative salaries, accounting fees would fall in there. And NIH actually allows for you to have a 40% indirect rate on your SBIRs. You can negotiate, usually that's out of phase 2, so if you're tracking your indirect costs appropriately, you would be able to see what your actual indirect rate is and then possibly negotiate that rate with the agency. The other thing to keep in mind with indirects is to make sure that when you're making a grant draw, that you do have enough indirects incurred to cover your rate. So if you have a 40% rate, make sure that, if 40% comes out to $8,000 in indirects, that you actually have $8,000 of indirects incurred. And Wanda will go through that a little bit too. Unallowable costs, just make sure that you're aware of these. For example, any type of advertising you do to promote your product sales is not an allowable cost. So you'll have to segregate those costs, and we'll walk through how to do that in QuickBooks. Any alcohol and entertainment costs are typically unallowable. Your internal R&D, so if you're working on a project that's not funded by a federal agency, those costs should be segregated, and those would be unallowable. Patent costs, any costs incurred on obtaining patents or other licenses or IP is unallowable. And then cost of raising capital. So if you're going out raising capital, preferred stock, common stock with investors, bridge loans, whatever it may be, any of the costs incurred to raise that capital are also considered unallowable costs. What's great about the SBIR program and the STTR program is that they actually do include a fixed fee. And this allows for you to have a profit. It's typically not more than 7% of your total costs, and that fixed fee, that reimbursement actually can be used for anything. So those unallowable costs I just mentioned, you could actually take that fixed fee and apply it against those unallowable to help cover some of those costs. I know it's not a lot, but the great part is the SBIR program does allow for that. Misallocation, inconsistent treatment of costs and unsupported costs. Make sure your expenses are actual and not estimated. Again, these are typically cost reimbursement grants, so make sure you've incurred the cost before you draw the costs and don't base it on an estimate. You also want to keep this in mind for cash flow planning purposes because you could be incurring a bunch of expenses up front and not get the cash until obviously you've drawn for those expenditures. So NIH is pretty good. They're usually a turnaround within the day or the day after. They're all electronic. You submit your expenditures and it gets direct deposited into your bank account. Sometimes DOD can be a bit slower, so keep that in mind. And again, NSF sometimes can be milestone-based. Treat costs similarly for funded and non-funded projects. So what this means is there's a great example that we see is travel. If you have someone traveling for marketing or sales purposes, you know, it's not funded, and they're getting reimbursed by the company using, let's say, the actual costs incurred. But then you have a person traveling that's funded, and they're doing some type of research, and it's funded by your program, and they're using the per diem rate. Now you're showing the federal agency, you're kind of raising a red flag. Okay, why are we treating travel costs different for our funded versus our non-funded projects? So keep that in mind, be consistent. It won't raise any red flags if you're consistent. And then finally, your costs have to be supported and documented. So that means keep your POs, keep your invoices, contracts, leases, timesheets. We'll talk about those. And again, remember that record retention rule. It's 3 years. They can be maintained electronically. That's fine. Just make sure you're maintaining them. And then last but not least, I have here inadequate timekeeping and inaccurate time and effort reporting. You have to maintain timesheets, and employees have to track their time by project. If they're doing administrative duties, if they're doing marketing, sales, any of their vacations and holidays need to be tracked. Keep in mind that vacations and holidays cannot be charged as a direct cost, so it actually flows through as your fringe. So we do have to segregate those. And then last but not least, allocate salaries and wages by percentage of effort. This one we run into quite a bit, and what that means is at the end of the week, let's say it's a week, 40-hour work week, if an employee has worked 45 hours and 40 of those hours were worked on the research for the grant, you can't just say, oh, well, that employee worked 100% on the grant. The federal government says you need to allocate that salary by percentage of effort. So they would say take 40 hours on the grant divided by their 45 total hours for that work week and take that percent and apply it to their gross salary. And that is the amount that gets allocated as a direct salaries expense to that particular grant. Again, Wanda will walk through this and we'll show an example of allocating salaries and wages using that percent of effort. So with that, I will actually turn it over to Wanda and we'll get into our case study.
Thank you, Ashley, and welcome everyone. So we're going to be flipping back and forth here between the slides, and Ashley has mentioned QuickBooks, and we're going to be looking at some things in Excel as well, so hopefully you'll find some benefit from this. So we're going to take much of what Ashley was discussing and looking at how to apply this to your company in a practical manner. We're going to have a fictitious company as our case study, and today I'm going to be using QuickBooks Pro. You certainly could apply many of these same things to whatever accounting software package you're using. It doesn't necessarily have to be QuickBooks Pro, but that's one that seems like most companies out there are using. So we all know that it's a good idea to maintain accounting records to manage the financial side of your business, including monitoring cash flow. You also need records in order to file your tax return. And as Ashley discussed, you'll need to be good stewards of the government's money and have the ability to substantiate the costs you're being reimbursed for. So today, with proper setup, you don't need to keep 3 sets of books, but just 1. And we're going to show you how you can do that. First, we're going to look at the chart of accounts. That's kind of the roadmap to your company. So in QuickBooks here, I'm going to go into the chart of accounts, looking at our fictitious company here. And you can see this is basically all of your income and expenses that your company may have. It basically separates out your assets, liabilities, and equity, your income and expenses, into each of the individual categories. And although many charts of accounts are similar, yours will be unique to your company's situation and will have some differences from other SBIR companies. So what's different in a grant or a contract environment is the ability to further segregate your costs by project, which Ashley was talking about. This could be a grant, or it could be other activities that your company might have, such as product sales, independent R&D, consulting, etc. So we're going to look at today one way to accomplish this that historically has worked well for many of our SBIR funded companies that we work with. You could do this by further segregating your chart of accounts into different categories. You could also use like a project or a job feature within your accounting software. What I like to do though is use the class feature in QuickBooks in order to segregate my costs. So in order to do that, first what we need to do is to activate the class tracking feature in QuickBooks if you haven't done that already. And to do that, you just go up to Edit, Preferences, pull this over, I got 2 monitors here, go into the Accounting tab, Company Preferences, and make sure that Class Tracking for Transactions and Prompt to Assign Classes is checked. This will turn on the class feature in QuickBooks. And once you have that activated, you can go ahead and set up the classes for your company. And in our example today, we have under direct costs, this company has a DoD Phase 1 grant, an NSF Phase 2. It also has some consulting services that it provides, a few product sales, and then it does do some independent R&D that's unfunded. It's using its own funds. And then we certainly also want to track fringe benefits, our indirect costs, and our unallowables. So the way I have this set up, all of these direct costs are a subclass of direct, and then we have the fringe benefits, indirect, and unallowables as separate classes. Once you have your classes set up, then what you do when you want to record transactions, if I go into a bill here and bring up a vendor, basically this particular purchase from Fisher Scientific was for lab supplies, and you can see it ends up being split up between 3 different direct costs. One is the DoD Phase 1, the NSF Phase 2, and then some independent R&D. Even though the category is the same, we need to split this up into each of the projects by using the class feature. The same thing applies when you're recording income. So if you go into Make Deposits and you have a grant receipt from one of your draws, you would just assign the class over here based on what grant it's for. So that's quickly how we look at income and expenses, but one of the most troublesome areas that we find is recording the payroll piece. And Ashley touched on this a little bit. First, as she discussed, timesheets are required for all employees, and this includes if you're a partnership or an LLC, it includes all the members, and if you're a corporation, it includes all the owners. So everyone really in the company should be completing a timesheet. And from that, then, the information from the timesheet, that's used to allocate your payroll among the various projects or activities your company has. And as Ashley mentioned, it should be allocated based on a percentage of effort between all of your projects, your unallawables, indirects, and fringe if you have a separate fringe benefit rate. And as she mentioned, the PTO hours should not be charged to a grant as a direct expense, even if that employee's time working in the company is devoted 100% to a grant. I repeat that even though Ashley talked about that before, just because we find that that concept is hard sometimes for companies to grasp. So let's look at an example here. I've got a spreadsheet where we have a payroll allocation. So we're looking at a payroll, a particular payroll, and we list all the employees over here and then what their gross pay is from payroll, right from the payroll journal. And then down below here we have the different deductions that are coming out to come down to net pay. In these columns here, we've indicated based from the timesheets where that particular employee had their hours for this pay period. So for example, Penny during this pay period, it was a 2-week pay period, had 100 hours total, 46 of which were working on the NSF Phase 2, 29 on the DoD Phase 1. She had a little bit of independent R&D, some indirect costs, did a little fundraising for the company, and then also had a day of paid time off. So what we do with calculating how we're going to segregate or separate these dollars based on hours is just take the formula here by taking her 46 hours over 100 times her pay to come down to her $2,300 that are going to be devoted to the NSF Phase 2. And we do that for each employee for this particular pay period and then total up the dollars below. And then when we go back to QuickBooks and we look at how this payroll is entered, I'll try to put this right on top so we can kind of see both together here. We look at the NSF Phase 2, all employees had $4,692 allocated to the Phase 2, $3,998 for the DoD Phase 1, etc. So going into QuickBooks, we're basically going to create a check, or you could do this in a journal entry, to record the net pay. So again, the net pay for this particular payroll was $18,000, so that's the amount of the check. And then we're going to allocate the gross pay based on the hours that all the employees worked in their various categories. So we're going to basically debit here the salaries and wage account as they correspond to these totals. We're going to show the deductions for the payroll withholding, which is coming from here. There was some health insurance that was deducted. That's indicated here. And then the retirement plan. So that way our entry balances. And if you go over here to the other side of the window, you can see that we're using the class feature to allocate those wages based on percentage of effort again. So the 4692 was for the NSF Phase 2. That's the class that we're using there. DoD Phase 1, etc. So we're applying the class based on the amount of payroll per project. And as Ashley mentioned, in some cases you're going to have salaried people that work in excess of 40 hours a week. So for example, here in Penny's case, it's a biweekly payroll. She worked 100 hours. It really doesn't matter that she's gone over the 40 hours per week. We're still going to do it based on percentage of effort. So 46% of her time on this payroll was spent on the NSF Phase 2, so we're applying that 46% to her gross pay of $5,000. Okay, once you have all of your entries in QuickBooks, you can use QuickBooks then to monitor your costs. You can use this to assist you in draw requests and in calculating your indirect rate. And one of the best reports that I use all the time in QuickBooks is called a profit and loss by class. And in order to access that, we just go up to Reports, Company and Financial, Profit and Loss by Class. I actually have one up here already with dates. So you can see across the top here we have each of the different classes, and including the consulting and products, since that will be used in calculating our indirect rate, because some of our indirect costs need to be allocated to all of our projects, not just those that the government funds. One thing I like about this, in this particular case here, by DoD Phase 1, I know that the amount of draws that I had equals the amount of the expenses that I incurred, so I know that I haven't overdrawn or underdrawn any of my direct and indirect costs for this particular project. You could also export this particular report out to Excel, and then with a little bit of formatting, you can use this to help you calculate your indirect rate. You can also use QuickBooks in order to monitor your costs against your budget. And as Ashley mentioned, you do have with NIH the ability to differentiate between direct cost categories by 25%, but I like to use the comparison of budget to actual in order to do that. And one thing nice about QuickBooks is you can memorize reports based on the grant period and filter it so that you only have the maybe one grant that you're looking at a time. So in this case, what I did is I filtered this report so that it only shows the NSF Phase 2 budget, and I'm looking at the period of time that my notice of award said the grant period was. So in this case, my grant period goes from October 1st of 2015 through September 30th of 2017. And at this point, I have drawn 187,000. My budget is almost 750, so I know I still have another 561,000 left to spend. But then it also shows me how much I've spent thus far on certain categories. So for example, I see in my subcontracted services category, I've already spent the entire budget on that line item. So this report is a good way to monitor where you are actual versus budget. And you can do this for any period of time. This is for the entire grant period. To set up your budgets, you basically, one way to do it is just to go up to Company, Planning and Budgeting, and Set up Budgets. And from there, you can just put in, basically right from your notice of award, how much you have allocated for each particular type of direct cost. One thing I like to do, going back over here again, is you notice we have all of our direct costs for this DoD Phase 1, but then we also have some fringe benefits and indirect expenses and the fixed fee here to show that the total is coming down to zero. So what I actually do in order to get these dollars in here, since those aren't coming right from a check or an expenditure, is every time I do a draw, and let's say my DoD Phase 1 indirect is 25%, so every time I do an invoice to DoD, I've got all my direct costs, I add in 25% for indirect and a fixed fee amount, that's the amount that I'm invoicing them. What I like to do is to actually do an entry to record the portion of that particular draw that's allocated as an indirect expense. So basically, I set up an account within my chart of accounts called indirect expenses. I post that as a debit to the DoD Phase 1, And then I also credit the same category, indirect expenses, but in this case I use the class as indirect. In this example here, I actually have allocated indirect costs to all of my projects, but you could do this on a draw-by-draw basis. And where this is helpful then is if you go back to your profit and loss by class, again, you'll be able to watch to see that your what you've drawn and what you have spent on this DoD Phase 1 comes down to 0. But more importantly, it shows here in the indirect expense class how much indirect expenses I've actually incurred versus how much I've actually drawn. And what I want always is to not draw more indirect expenses than what I have incurred. Now on a month-by-month basis this may fluctuate, but over time you want to make sure that what you've drawn for indirect expenses does not exceed what your actual indirect expenses are. I think at this point we would be happy to take questions from anyone. And we went kind of through this pretty fast, so I'm sure that there are questions out there.
Hi, I'd like to ask a question.
Sure.
I'm a little confused on the indirect categorization. I think our grant had allowed us some monies for rent purposes, for renting some additional space. Maybe I misinterpreted that. Is that sometimes a grant allocation or is it not?
I could see in some cases if you had rent that you had to incur specifically for that project, I could see where your rent would be a direct cost in that case because it's a single purpose use. Whereas if you just have a lab and whether you had the grant or not, you would have incurred that rent expense.
I think my baseball door off. Can I try mine?
Can you repeat that, please? Hello?
It sounds like if the is specifically for that grant, the work on that grant.
Right. If it's specifically for that project because you need to have special space because maybe your current place doesn't have a clean room or maybe it doesn't allow for animals, let's say, and so you have some special space that you need to have just for that project and it's only used for that project, I could see where your rent would be a direct cost in that case. But if you just have your lab and you've got, you know, 2 or 3 projects going on there and maybe that's where your office is and maybe you do some independent R&D there, then I would say that that's an indirect cost because it's not specific to a project.
A similar question in regards to labor. If we have labor that's only allocated, it's part-time labor, it's only allocated for the grant, that's 100% direct. We don't have to allocate. They have a side job doing something else at another company.
Sure, I could see some cases where a part-time person could be 100% on a grant. Usually we don't, you know, we like to say, well, you can't have somebody be 100% on the grant because they're going to have some, you know, holiday pay or other PTO or perhaps, you know, there's some administrative time. But I could see cases where a part-time person, they come in, they do their research for 4 hours and they don't really have any other responsibilities within the company. I could see in that case where a part-time person could be 100% on a grant. You know, with the full-time people, it's a little tougher because you're just going to have even company things that you need to deal with, you know, that may not be direct research. Does that answer your question?
Yeah, a little bit. We've grant and just a couple of partners in the business, and whenever they're applying for that business, we're just allocating those hours. We don't have any other source of income for those people within the company. They have income outside the company, so I'm presuming that it's just a straight allocation for those hours. There's no division by the total hours a week.
Right. You don't need to look at the hours that they're working outside of the company. You're only worried about the hours they're working for you and what you're paying them. So I know, like, when you do your your original grant budget, and sometimes you'll say, okay, well, here's their starting salary. They're going to make $60,000. Oh, but wait, they only work half time for me, so it's $30,000, and it's only for X amount of months, and so you're converting that down. When you're looking at allocating their pay, you look at what you're paying them from your payroll records. Don't worry about what they make outside of your company. You're looking at, if you're paying them for that part-time work $1,000 that week, and they put in 4 hours for you, every day, so they work 20 hours, you would take their 20 hours divided by, I guess, or take their grant time divided by the 20, and that's what you would apply to that 1,000. You don't really care what they make at their other jobs. Always just take what's from your payroll records and from your timesheets.
Yeah, thank you.
Could I ask what's allowable in terms of giving people medical insurance reimbursement, and what do you have to document, and can you reimburse their whole family's expenses, or do they have to document what their fraction of the insurance is, and sort of how do you do that?
I think it depends on your company's policy. If your company's policy is to cover 100% of your employees' insurance, and that includes family coverage, then that is fine. We did have a client once a few years ago that was negotiating rates with NIH, and that was their policy. Their policy was to pay 100% of their employees' insurance, including family coverage. NIH did push back to them and said that that was kind of excessive coverage. I think partially because the person they were negotiating with didn't get that good of a deal with the government themselves. So, if that's your policy, then I would certainly say it's allowable. I think if you ever get into a situation where you might be negotiating and you have, a Cadillac insurance plan, they might come back and say, hey, this is a little excessive. We're not going to fund all of it just because, it's a really good plan. But there really isn't anything written in stone. Do you have anything to add to that, Ashley?
No.
If that's what your policy is, the government doesn't say that you can only cover half the coverage or you have to cover 100%. That really isn't spelled out in any of the regulations.
And how about the record keeping? Do we have to have the employees give us receipts or something, or do we just?
So now, are you talking about each employee going out and getting their own insurance, and you're not part of a group plan?
Yeah, that's right.
Okay. Well, I'm going to put on my Affordable Care Act hat. This is really outside of SBIR, but in 2016, that was actually not permittable under the Affordable Care Act to cover an employee's own health insurance. They had to be part of a group. Congress did kind of fix that, and they did make it retroactive so that they're not going to penalize companies for doing that in 2016. But in 2017, then they are allowing you to cover your employees' insurance. And ideally, yes, they should provide you with a copy of their invoice. You can pay the insurance company directly. That would be probably even better yet, because then you know that the money is going right to the insurance, and the employee isn't just cashing the check and not spending it on insurance. But if you are reimbursing your employee for health insurance that they're going out to the marketplace and getting, and they're not part of your group, you should require some kind of receipt or something, or pay the premium directly so that you have that substantiation. And you really need to do that not only for SBIR, but even under the Affordable Care Act rules.
Okay, thank you very much.
So I know we just have a couple minutes left until this is over, but I had a question that might pertain to some of the people on the call. Sometimes a notice of award takes some time. Are there things that companies can prepare to get ready to accept the funds?
Sure. I mean, if they're a first-timer?
Yes, yes.
There's a couple of things, actually just even going through the whole proposal process, you probably have already done all your registering, have a DUNS number and all those things that you need. If you are a first-timer with NIH in particular, once you get your notice of award, the next thing that you would need to do is get set up with a payment management system so that you're able to get money. Basically what that requires is there's just a form that they have. You can go to the payment management system website, and there's basically a direct deposit authorization form that you and your bank fill out. So together you fill out parts of it, and then the bank actually has to put in the routing number and the account number. And I think you still need to mail that in. I don't know if they're accepting faxed or scanned copies of that, but that is something you'd want to do right away once you get your notice of award, or even before then. At least have it ready to go, so at the time that you can start drawing money, they'll have your bank account information. And then once you do that, what NIH does is they will provide you with a login and a PIN, so that when you go to the payment management website, you'll have your login credentials, and then you'll be able to go in there and draw the funds. But the first step there is to get that direct deposit authorization form filled out. Other agencies I know use, there's something called SAM, some use that. DOD and DARPA and all of those agencies are going to vary depending upon the terms of your grant, and they'll usually tell you how they want you to submit. Often with them it's submitting an invoice versus going in and requesting a draw. So just kind of look at, work with your contacts at those agencies to see how they want you to submit. A lot of times you actually submit your invoice to the contracting officer, versus like with NIH, you're not going to be dealing with your scientific program manager. You'll actually be assigned a payment management system manager once you get to that point where you've been awarded funds. And then once you're in their system, anytime you are awarded a second grant, that automatically then will just populate right into your payment management login. Any other questions?
Yeah, I had a question about, again, health insurance reimbursement. If a person is only a part-time employee, can we pay only some fraction of their health insurance?
Sure, you can.
Okay, and the fraction would have to somehow represent the fraction of their full-time employment?
That would be kind of up to you, and again, I'm certainly not a an Affordable Care Act expert here. There are probably some discrimination rules on that, and we're kind of probably going out of scope here a little bit, but I think if you're kind of consistent throughout your company, you know, that's the main thing.
Okay, thank you.
Okay, anybody else got anything? Okay. Well, thank you, Ashley and Wanda, so much for this. I think we got a lot of valuable information from here. And please do contact them if you have any future needs. They would be, I'm sure they'd be happy to talk with you.
Yes, thank you. We're happy to help in any way we can. If anyone has questions, feel free to reach out.
Okay, great. And I'll be putting this presentation online shortly, and also at least sending out some of the slides as well. So let me know if you have any questions.
Thank you, everyone.
Okay. Thanks. Bye-bye.
Bye.